Hi everyone, welcome to another weekly Forex forecast for the week ending February 28th. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to discuss the Euro USD, the Pound USD, the Dollar Yen, as well as the Euro versus the Pound. And we're going to wrap things up with the Pound versus the Canadian Dollar. The Euro USD reached a critical support level last week, and the Dollar Yen is breaking out from a wedge pattern that dates back to 2015. So those are two pairs you're going to want to keep an eye on this week. So let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up, as always, is the Euro USD, and I wanted to start with the weekly time frame because this is a descending channel I've been discussing now since September of last year. So notice how this was the 2019 high back here, and this channel has directed the price action here ever since. And I even discussed the pair back here and mentioned that a retest of the top of this channel was likely, and once we got that retest, that a rotation lower into channel support was also likely. So we've had both of those occur now, and I wanted to start with this chart because this indicates that a bounce from the euro is likely. So if you're short the euro or if you're very bearish the euro, you may want to reconsider based on this descending channel. Now, is there a chance that the pair could break below this level? Of course. However, if we use this channel as any indication, this has been directing the price action here for over a year. So we have to respect that as long as the pair is above that channel support. So if I move over to the daily time frame, you can see how the pair bounced from that channel support last week. So this bottom level right here is that channel support, and notice where the pair put in a low last week. Furthermore, it also closed back above 108.25. So I mentioned this level last week as one that if it broke down, we could see a retest of that channel support. Sure enough, we had the retest of channel support and then also a close above 108.25. So for this week, if we do see a retest of 108.25 as new support, we could see buyers defend that level, and key resistance comes in at the 109 handle. So notice how that was this low, or at least this closing price back here, and it was also the level that supported the pair back here on this candle. So right now I have 108.25 as support and 109 as resistance. Now if buyers really get behind this move, we could very well see the pair retest that 109.90 handle. So in other words, if we see the pair catch a bid from 108.25 and also then take out 109 as resistance, we could even see an extended move up here toward the 109.90 level. And that's just based on this descending channel, which again has directed the price action here for over a year. So back here we had a retest of support, and it took a while for the pair to get off of that level, but once it did, you can see how we had that move up into channel support. So keep in mind that that could happen again, where we get maybe some consolidation down here, and then we get a move higher all the way up into the top of this channel. All right, so that's one possibility. It doesn't mean it will happen, but it is something to keep an eye on over the coming weeks and months. Alternatively, of course, if we see that 108.25 level break down this week and the pair head back here to channel support and it continues to show weakness, that could indicate further losses, perhaps closing that April 2017 gap around 107.25 that I've been talking about now for several weeks. But as of right now, as long as 108.25 is intact as support, I think that sellers have to be careful here because we could very well see a move back up into 109, perhaps 109.90. Next up, we have the pound versus the US dollar, and the pair continues to be a little bit frustrating for some because we are still moving sideways even after coming off of that 130.50 resistance area that I mentioned last week. So that 130.50 is the confluence, is the intersection of this 2019 ascending channel, and it's also where this 2019 trend line intersects. Okay, so 130.50 was resistance last week, and you can see how the pound came off of this level nicely. However, it did catch a bid at this recent swing low. So as of right now, the pair is kind of caught between this bottom down here and also that 129.80 level that I talked about a couple weeks ago. So notice how 129.80 was resistance back here, and it then started to serve as support through this area. So I do think it's going to take a break of these recent lows in order to expose lower levels. So notice how 128.70 has served as support back here and again last week. So it's going to take a move below that area to expose 127.70 and perhaps 125.70. So those are two levels that I've been discussing now for weeks. However, again, it's going to take a close below 128.70 in order to open up those downside targets. Alternatively, if we see the pair come up and take out this recent high up here, that would be a sign of strength and could even target that 131.70 level. But all in all, there's a lot of indecision here, and just based on this choppy price action, if you've decided to look elsewhere, I totally understand, and I would too. I think there are better opportunities out there, including even the Euro USD, the dollar yen, even the pound versus the Canadian dollar that we'll discuss in a minute have been moving a lot more favorably than the pound USD in my opinion. Next up we have the dollar yen, and I wrote about this breakout last week on the blog. So notice how we have this wedge pattern that has been in place since the 2015 high. And this pattern capped the pair recently right here, but last week's price action did confirm that breakout. So what this means is that unless this was a false break, it means that we could see the dollar yen push higher over the coming weeks and months. Now, if I drop down to the daily time frame, you can see how we have some key levels in play as well. So this blue level is the top of that wedge that dates back to 2015. And you can see how just recently it did cap this advance as well as this one, but last week did confirm the breakout. Furthermore, I put the pair above that 111.10 level, which was based on this gap back here that I mentioned several weeks ago. So Thursday's session put in a low of 111.11, confirming that this 111.10 area is support for the week ahead. Furthermore, we have 112.20 as resistance, which was last week's high, and you can also see how it was resistance back here and also support before that. So keep in mind that we could see 111.10 break down, and if we do, then we could see a retest of the top of that wedge as new support. However, as long as 111.10 holds, I do anticipate a push higher into 112.20 once again, with a break there exposing 113.25 and perhaps this 114.50 area. Now 114.50 is going to be a big one to watch over the coming weeks because it was the top of this range that dates back several years. Notice how 114.50 has been resistance for over a year now for the dollar yen. So that's going to be a big one to watch over the coming weeks. But again, I do think that as long as this 111.10 area holds as support, we could see another push up into 112.20 with a break there exposing 113.25 and perhaps that range top around 114.50. The euro versus the pound is one that I discussed last week, and it's a little bit more speculative than most. However, there are a few things happening here with regard to the technicals that I wanted to point out. And the first, as you can see, is that we could have a potential double bottom here. So this low back here, as well as this one, could be forming a bottoming pattern. However, just keep in mind that the pair needs to take out that 85.90 level that I mentioned last month in order to confirm it. Additionally, you can see how recently we had a break below this descending channel. However, as I always say, a break below a descending level often becomes a false break. So notice how we had this close right here, and the pair then consolidated for several days below that level before breaking back above it last week. And as I mentioned in last week's post, the pair needs to climb back above 83.85 in order to expose higher levels, including that confluence of resistance up around 84.60. So if buyers intend to follow through on this close back inside this channel, they need to close the pair above that 83.85 level in order to expose the top of that channel up around 84.60. Now, if you want to be a little bit more conservative here, you can wait for a daily close above this confluence of resistance at 84.60, because I do think if we see a break there, that could expose 85.90 based on these highs back here. So that could give you a nice little run if we get a break up here up toward that 85.90 handle. And support for the week ahead is unchanged right around 8,300. And that's just based on the bottom of this descending channel. So buyers still have some work to do here, but I do think this is one to keep an eye on, because if we do see the pair take out 83.85 and especially 84.60, we could see this potential double bottom start to unfold, which would expose 85.90 and perhaps even higher levels like 86.80 and 8800. The pound versus the Canadian dollar is a pair I've discussed several times now based on this rising broadening wedge that extends off the 2019 lows. So a pattern like this hints at exhaustion from buyers and an imminent break lower. So I discussed this pattern back here, and sure enough, we saw a bounce from that wedge support, but then just last week, we got that break below that support level. So this break confirmed this rising broadening wedge, and it also exposed the next key support around 170.50/60. So this is the same level that I pointed out several weeks ago based on these highs back here and also these lows. So right now, 170.50 is the level that sellers need to break in order to expose lower levels. One of those levels could be 16700/30. So notice how that 167.30 area was a key pivot for the pair back here, and it also served as support. All right, so if we get a break below that 170.50 area, that could expose 167.30. And of course, any rotation higher this week could find resistance up around 172.30, perhaps a little bit higher depending on how long it takes for that retracement to play out. But all in all, I'm going to stay relatively bearish the pound versus the Canadian dollar as long as the pair is below this former wedge support around 172.30. Just keep in mind that we could see some consolidation up here until that 170.50 level breaks down on a daily closing basis. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.